thanks across United Life to Seoul and Shaun Cochran, CLSA's head of Korean research. Shaun, you are absolutely right. They kept it on hold, but the European debt crisis, how much of an impact and a weight is that on their meeting when they discussed to cut or not to cut?
Certainly a key factor in that if we look at Korea, we're essentially an export-driven economy. So where global growth goes is the core driver to the likely direction of our own economy. And as a result, they'll be looking to see some traction in Europe, which is obviously a hard thing to bet on right now.
And also, Shaun, again, Korea, many are saying to me that in fact it's one of the most dependent on these exports. I mean, how volatile, how vulnerable rather, is it to the European crisis, do you think?
Well, absolutely it's vulnerable in that we have to remember that the modern economy is essentially extremely interconnected. The global banking system sees these transmission mechanisms move in a matter of seconds rather than days or months, which might have been the case many decades ago. So what it means is the trade finance can quickly tighten up. Risk appetites obviously respond immediately. And we have the process of the day business constrained by the availability of finance. And then you'll see CEOs obviously respond by being less willing to invest. So if we don't see a handle gained on the European situation soon, then that will bleed into the growth expectations around the world, and it immediately impacts Korea once we start to see that contraction. The big question, of course, is things are starting to improve, so will they get a handle on it? And we're obviously at crunch point with the Greece situation over the next couple of months.
You mentioned the word starting to improve. Is that purely because the ECB is pumping money in the system and therefore Korea benefits arguably the most of all the Asian countries?
Yeah, certainly there is a very strong degree of correlation between foreign buying and the amount of money being pumped by developed world central banks. Korea benefits because it's a very large liquid market. It's obviously export-oriented, as we discussed, and so in some respects it acts as the ATM of Asia. If you want to put money to work in Asia, if you want to put money to work within emerging markets, then Korea has large liquid companies in which you can do it very quickly, and the same in reverse if risk appetite reverses.
And Shaun, as the ATM of Asia, as you call it, if the ECB were to stop pumping money, how damaging would it be and how would it change the central bank's viewpoint on interest rates?
Well, it'll depend under the conditions under which they stop printing money. The most likely scenario would be that there is some degree of confidence around solutions. It's possible that there is some degree of conflict around the ability to support because they're not happy with the efforts of various countries to meet austerity needs. So depending on the circumstances, if it's a circumstance where it's a contracting environment where the austerity is not being met and they're playing hardline, then that would be very negative for flows into Korea. We'd immediately see net selling and it would likely trigger some form of response from the BOK. And the latter, then unlikely to see any response at all.
And just a final question for you, Shaun, again, you're advising investors again to look at the banks with good valuation, also the steel area, but the banks, arguably, some are saying could be quite exposed. But you're saying look at the banks, they do offer good valuations, in Korea at least.
Right, so what we would argue for the bank sector is it's lagged, it's cheap. The simple reality is markets are at a crunch point and it's possible that things go either way. Now, from our perspective, if one is putting beta into the portfolio and we're relatively cautious, then the places we want beta are areas where they've been under-owned, less aggressive valuations, and so the downside for being wrong is significantly less, but you still have clear exposure to any cyclical recovery should it emerge.
Shaun Cochran, many thanks for joining us there. Shaun Cochran, the head of research for Korea at CLSA.